Strategic Treasurer currently has 2 live surveys open through July of 2022. They're on different aspects of payments. Virtual Card Solution Survey with MasterCard is a quick 10-minute survey on challenges, expectations, and value drivers of virtual card programs. Global Payments with Corpay is one of our long-standing premier surveys researching FX, cross-border transfers, and new payment technologies. Please visit strategictreasurer.com/surveys to learn more.
Hello and a warm welcome to the Open Treasury podcast, your go-to source for the latest news and analysis in corporate cash and treasury management. This show is brought to you by CTMfile.com and the Treasury News Network, where treasury professionals learn and share the information that matters most. I am Pushpendra Mehta, and my guests for today are Jack Large, editor of CTMfile, and Craig Jeffery, managing partner at Strategic Treasurer. Welcome to the Open Treasury podcast, Jack and Craig. Thank you for taking the time to be with us on this podcast.
Looking forward to it.
Thank you. This week, we are focusing on 10 stories that cover 5 themes. You can find these stories in the show notes from this podcast or by looking them up on CTMfile.com. Let's get started, gentlemen, and begin our discussion with the first section that revolves around diverse economies. The Bank of England has said that the price volatility of recent months in energy, metals, and other commodities has exposed a number of vulnerabilities in the market and posed risk to financial stability. Jack, do you think there is a significant risk of further disruption in commodity markets?
Oh, yes. And the example of Russia basically stopping the Ukrainians exporting their grain from last year, let alone this year, is just an example of how people are really worried about commodities and its impact, not just on business economies, individuals' economies. It's putting the price up significantly. I think the Bank of England were very sensible in worrying about that.
Moving on, the next stories pertain to the Chinese economy. The first story is about China considering an unprecedented fast-track sale of special bonds as part of a US $220 billion stimulus package, signifying Beijing's economic concerns. Second, there is more turbulence in China's property sector as one of its leading real estate developers, the Evergrande Group, is inching toward a landmark onshore default that will encourage investors to adopt a tougher stance towards other property developers battered by China's real estate debt crisis. Craig, my question to you is, in the light of these developments, do you think China's economic and real estate travails could spill over into the global financial system, which will then be a problem that the world may not be able to ignore?
Can they spill over? They are spilling over in different ways. I mean, the growth rate of the Chinese economy has always been close to double digits or at double digits. Now they expect it to, or some people are indicating that it's expected to be just over 4% from a poll of economists by Bloomberg, and they're not really going to meet their target, their diminished target of 5.5%. So this is a significant slowdown in one of the largest economies in the world, which will naturally have some other reverberations happening. This idea of pulling forward fundraisers from 2023 to the second half of 2022 is not done lightly. That's not something that they have typically done. And I think that shows the seriousness from the broader economic side. And onto the real estate market, your comments there were good. I mean, Evergrande, we've heard them in the news. The Evergrande Group has been in the news, concerns about an impending default. People are not extending the term. They're not able to renegotiate those. And this wave of defaults, as the article says, is a concern. So you have Evergrande and Shimeo Group defaulted on $1 billion bond. These are notable. They're not the largest defaults that we would expect to see, but these are a couple items happening close together. A reverberation of a slowing economy, the impact of some of the lockdowns that have happened. So these are all significant negative signs for what's going on in China, and that will have an impact on other parts of the world.
The last story in this section is about the euro sliding to a 20-year low and approaching parity against the US dollar amid concerns that an energy crisis will tip the euro region into a recession, while the US currency is being boosted by expectations that the Federal Reserve will hike rates faster and further than its peers. Jack, my question to you is, will the relative decline of the euro push investors toward the dollar and away from the euro?
This has been happening over several months. I mean, in May it was at 96 cents, so it's been getting worse over the last few months. It's also going to get worse as reverberations from the Ukraine-Russia war continue. But don't underestimate the pressure that the US is under as well. I'm not sure the economy there is going to be as successful as Biden and people claim. It's just an example of how corporates are having to be very careful about investment and in terms of how they manage their monies.
Craig, would you have a similar opinion or otherwise?
Yeah, I think Jack is touching on a couple key points there, including the lack of strength in the U.S. market, even though it's been declining. Comparative strength may be part of the cause for this. Is just recession fears in Europe, resurging inflation, the uncertainty around energy. Some of the uncertainty around energy is impacting Europe heavier than it is the U.S., but these things are driving negative reactions on both sides of the pond. We just know it's a tough economy going ahead based on these items that we don't see a let up in any of them in the near term.
So from diverse economies, let's move to the much talked about bank deal in Russia because of the Russia-Ukraine crisis. HSBC Holdings, one of Europe's largest lenders, is reportedly in discussions to sell its Russian division to local bank Expo Bank, with offices in over 50 Russian cities offering corporate and retail banking as well as other financial services. Jack, do you think this sale will mean that more major financial institutions will exit or reduce their business interests in Russia due to the conflict in Ukraine?
Push, this has been happening not just in the last month or so, it's been happening for quite a few months. And I was in a conversation between corporate treasurers and they were talking about how they're dealing with those that still trade in Russia, how they're dealing with getting banking services in Russia. And they all expected HSBC to come out. And the alternative is, in fact, not just Expo Bank, but actually Chinese banks who still trade in Russia. But it's just a specific example of the tensions inside Russia at the moment. Not unexpected, just people are managing around it.
Interesting analysis. Moving from bank deals to technology and embedded finance, according to a report by Stripe, a payments technology provider, and Finch Capital, venture capital investments in embedded finance has more than doubled between 2020 and 2021 across Europe and North America. The era of embedded finance is taking hold. According to Oracle estimates, embedded finance represents a massive new opportunity and addressable market opportunity estimated to be worth over $7 trillion in the next 10 years, twice the combined value of the world's top 30 banks today. Corporates and banks are turning their attention to embedded finance. My question to you, Craig, is, in your opinion, what makes embedded finance such an attractive opportunity? Is it the versatility and usefulness of embedded finance that extends to almost any industry where buying and selling takes place, or are there other factors in play that make it the future of finance?
The reason for this podcast being called Open Treasury is this general move towards embedded finance, embedded treasury, where the connections are there. This has been multiple years coming. Organizations have to connect. The idea that these connections become more seamless, they're more embedded within the software, means we're dealing less with the friction of settling a transaction or a trade or getting information. Now it's there and it's available. And you can see that, from your opening comments about, more than doubling of investments into this space. They're putting it there because they're expecting outsourced growth. And we're seeing outsized growth well above what expectations are in different areas. The use of APIs, embedding these items into banking systems, financial systems. They're making it easier to connect. That efficiency play, that speed play, both of those are two of the top drivers. It reduces errors, speeds the process, saves costs. Those are all really, really good for those in finance and those in treasury.
Excellent. The last story in this section is about the European Central Bank's confirmation that the new release of the Target 2 securities platform was successfully deployed on the weekend of July 2nd. Jack, why do you think this is considered a key milestone in the T2 and T2S consolidation project?
There's always a surprise with Target 2 meeting any deadline. Target 2 has been a series of late delivery, but having said that, Target 2 is a wonderful technology and the securities business will change. And it'll take time because each of the players has got to get used to real-time security settlement, real-time accounting and so on. But it's a major step forward. But I think it'll take at least a year to fully implement, maybe longer.
Moving forward to the next section, which is about central bank digital currency or CBDC. A number of countries have already launched a CBDC and many others are at various stages of development. However, Denmark's central bank has questioned the motivation for CBDCs among developed nations. Denmark's national bank has stated that while it is open to new forms of digital money and plans to hold a conference on the issue later this year, its financial system has no pressing need for CBDC. Jack, do you think the motivation is absent in Denmark as it is already a leader in adopting digital money?
No, Denmark has got a track record of being very forward-looking in terms of technology, but they've also got a track record of being very sensible and cautious. The recent problem with terror in the clearinghouse in the US for so-called stablecoin is just an example of the worries that the Danes are grappling with. It's not that they're not considering it, it's just that how to manage it. I expect Denmark to come through with a sensible solution at some stage, but it doesn't have to be this year or next year. It's a matter of being cautious. And I think a lot of central banks, certainly the rumours I hear from elsewhere around the world, the central banks, are looking at it, but they're not necessarily going to do it.
The fourth section for discussion is about the proliferation of frauds. The first story in this section is about the Financial Times claiming that Wirecard gained euro 900 million SoftBank investments in 2019 by faking client data. FT has been calling out Wirecard for foul play since 2015. The second story pertains to Juniper Research's most recent fraud studies that predicts that merchant losses to online payment fraud will cumulatively and globally total over US $343 billion between 2023 and 2027. Criminals are continuing to innovate in areas such as account takeover fraud, and Juniper Research says that innovations are at the forefront of the growth in fraud. Craig, I know fraud is a subject which is very, very close to your heart, and Strategic Treasurer has done a lot of work. Do you think the menace of fraud is on the rise because of sophistication of fraud attacks and innovation in payment frauds being at the forefront of the growth in fraud?
Yeah, most certainly. We're seeing this in every way, in every direction. There's no let up. And like you said, it is due to sophistication, the use of automation. They're getting much higher payouts. And because they're getting higher payouts, they continue to press their advantage, and the defense tends to be slower. So most certainly it's been going this way. I look forward to the time we can say, no, it's slowing down. We're doing better. And a lot of the criminals are going out of business for this. But no, we definitely see it. So Juniper Research, they have some really good insights and expectations there. Regarding the Wirecard fraud, I think when that came out, there was a lot of discussion about the round tripping, this, sending money back and forth to create an inflated balance sheet. And then there was, more and more discoveries that have come up, and, hats off to Financial Times for poking at this for a long time, but seeing these fictitious client lists and other ways that this was brought about just shows the level of depth that they went to within that organization to accomplish this very significant fraud. So internal fraud, external fraud, use of sophistication, or just falsification of records here. There's a number of examples that we've seen and will continue to see in the near future, the foreseeable future.
Internal fraud, external fraud, falsification, sophistication, innovation. Jack, what is your opinion?
The surprise about this is the gobsmacking amount that Juniper I estimated, 343 billion online fraud payments. And their list of the transactions, the types of sources, of the different sources within the online transactions is fundamentally right. And it's basically what the problem is, the indiscipline. And I don't see any other solution other than just going back to basics and doing right things sensibly. Like if a colleague, because one of the biggest sources of fraud is internal fraud, if a colleague always works at weekends, you have to be suspicious, etc., etc. It's the basic things that need to be done, and we're just being forgotten about. I mean, that's 343 billion is the equivalent of many countries' GNP, let alone anything else.
Absolutely. Moving from GDP and GNP and frauds, I would like to wrap up this conversation by seeking your opinion on your choice for the biggest or the most important story of the past week and why. Can I start with you, Craig?
Sure. I'm going to go with the Bank of England warns on commodity story. I mean, their warning is not just there's a lot of issues with the supply chain. The war has exacerbated some of this, but they have pointed out and have raised the alarm further about what's going on and the impacts on the broader economy. I think this is that's my top story for this. Not the exposure part, the financial exposure to the banks in the UK, but the broader impacts on the economy, both in Europe, North America, and globally. That's my top story.
Wonderful. And Jack?
Mine isn't a specific story. It is what we've got is the world is under stress because of climate change, the pandemic that we're still going through. The UK government's forgotten about the pandemic here. Ukraine, Russian invasion, we're getting failing economies. And what we're getting is the reaction to this, some of which is back to basics, the other of which is increased caution, like cash holdings are increasing. There are serious discussions inside Treasury Department saying, do we need less technology? We need to be sure of it. The atmosphere in Treasury is changing.
That's an informative conversation. A big thank you to you, Jack and Craig, and to our CTMfile audience for joining us on this edition of Open Treasury. Please subscribe and look in the show notes for the article links. Thank you. This podcast is provided for information purposes only, and statements made by CTMfile or guests on this podcast are not intended as legal, business, or consulting advice. For more information, visit ctmfile.com.